Meanwhile, Joe, you're also looking at NVIDIA's performance after the event as well. What exactly are you keying on, and what exactly do you think we could see in terms of the upside or downside and some of the volume that goes along with it?
I think the important thing for NVIDIA is, can it escape the macro? Can it overcome the macro with what it's going to say? It's going to be a very clear message. They're going to talk about Blackwell Ultra. They're going to talk about the AI platform moving forward, just like they did with last year's conference talking about Blackwell. And the message clearly is going to be, keep spending on our chips. But if we go back and if we could, if sunny Englewood Cliffs, New Jersey could pull up a chart of NVIDIA last year at the GTC conference, you'll see from the middle of March at the initiation of the conference until the middle of April, the stock rallies after the GTC conference about 8%. And then guess what? The macro gets in its way. And I fear that's exactly where we are right now with NVIDIA. They've already alleviated the concerns surrounding DeepSeek with raising their guidance. They're going to introduce further AI strategies that are going to get people excited and have people keep spending. But is the macro environment ultimately going to be the problem? I'm concerned it is.
And if I could just follow up 1 second with you, Jim, NVIDIA, because we framed it around NVIDIA as a catalyst this week. What are the thoughts there? This is a name that you are a part of.
Yeah, and very happily a part of. I think everybody has to understand there is no free lunch in investing. You don't get reward without risk. And the risk is volatility, which means that you get drawdowns like this. Another friend of the show, Adam Parker, has done some excellent research that says if you want to get 10 baggers like NVIDIA, you have to be prepared for routine 50% drawdowns, which has happened a lot in NVIDIA's last 5 years. I'm not saying that that's where we are now. I actually think that it's probably, Christina pointed this out, very attractively priced at 26 times forward earnings for earnings per share growth at 53% going forward. That's a PEG ratio of 0.5, and boy, I love that. So I feel very good about NVIDIA, but I'm going to close by going back to where I started. There is no free lunch. If you want the rewards that an NVIDIA brings, you have to be prepared for the risk and the volatility.
All right, Bryn, I want to bring you into the discussion as well because you have recently added to that position in NVIDIA on this kind of recent downtrend that we've seen short term. Take us through why and just why it is an important holding for you.
Yeah, I think Jim and I both added to it last week. So NVIDIA has been trading within a pretty tight band over the last 9 months between about 109, 110 to about 145. And so it got down there last week. And I feel that the fundamentals and the price of NVIDIA have completely separated, which happens. It happens on the upside. It happens on the downside. And so to Jim's point, they have very high margins. They're growing top line in the 50%. It's a cheap stock. And I think that AI will continue, and it's in the early stages. And if you talk to anybody in the data centers, anybody at the hyperscalers, none of them are saying we are going to build less data centers. None of them are saying we are going to reduce CapEx. All of them are continuing to spend, and NVIDIA, we know, is probably the highest margin recipient of all of those dollars. Now, to Jim's point of the risk, I think one of the risks and one of the clouds over the name are with the tariffs. This is a national security issue about the platform that they offer in China. And so there hasn't been a lot of saber rattling about that, which is good right now. I think that's one of the reasons the stock bounced with the market. But I think the market would sniff that out well before we would see that in print if there was going to be more extreme export controls on their products. So we'll have to wait and see. To me, that's the biggest risk. But once again, I first bought the stock in 2018 because there was some like Ethereum slowdown, and that's why most people used their chips at the time. And to Jim's point, volatility is the price of admission, but this to me is one of the most durable, cheapest of the tech names out there, and it's right in front of investors to take advantage of.
In recent years, NVIDIA has shown itself to be a profitable investment. The artificial intelligence, AI, explosion has caused the stock to rise quadruple digits over the last 5 years. And if we look at growth projections for the market as a whole for the upcoming years, NVIDIA may continue to gain. As the top manufacturer of AI chips worldwide, NVIDIA is well positioned to profit from the $200 billion AI market that is predicted to grow to $1 trillion by the end of the decade. If you haven't purchased NVIDIA yet, or if you want to increase your holdings, this is fantastic news for you because there is still time to invest in this high-potential stock. However, what is the best way to invest in this leading AI player? You might be able to increase your potential benefit by using certain tactics. This comprehensive guide to NVIDIA may help you achieve significant success in the long run. Why NVIDIA? Let's start by responding to this query. Why is this stock receiving so much attention when there are so many other AI stocks available? Why NVIDIA? In the rapidly expanding AI business, NVIDIA is the top chip creator, but the company hasn't stopped there. By developing a comprehensive range of goods and services, astute CEO Jensen Huang has made the business the go-to player for anything AI. As a result, NVIDIA becomes the partner of choice for clients at every step of the AI journey, from constructing a data center to using AI agents to apply AI to real-world issues. As a result, NVIDIA has experienced double and triple-digit growth, with sales consistently hitting all-time highs. Revenue, for instance, increased 114% to $130 billion last year. Furthermore, NVIDIA's commitment to innovation and its promise to update its processors yearly give investors confidence in the company's capacity to hold on to its market-leading position. Let's now examine two possible long-term ways to optimize your NVIDIA investment. 1. Average of dollars and costs. The stock of NVIDIA has dropped recently, as have many other growth stocks. However, the shares have generally been valued at a premium. For instance, during the past year, the company has typically traded between 40x and 50x projected earnings forecasts. Additionally, the stock's actual price has varied, ranging from less than $100 per share to over $140. When should you buy then? Dollar cost averaging spares you from having to make that difficult choice. With this approach, the same quantity of a specific stock is consistently purchased over time at different price points. For instance, over a few years, you may acquire $500 worth of NVIDIA every 3 months, regardless of the price at the time of purchase. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
NVIDIA are lower today as they kick off their annual GPU Technology Conference. All eyes will be on CEO Jensen Huang's keynote address tomorrow, where he's expected to make new announcements on AI chips. Later on Thursday, the company will host its first ever Quantum Day, with CEOs of notable players in the space taking stage alongside Huang. NVIDIA has scrambled to retain its AI crown ever since DeepSeek sparked a sell-off in AI stocks back in January. It's 22% below its all-time high amid intensifying competition. So will it do enough to entice skeptics? Let's ask our next guest. He's got a neutral on the stock. Gil Luria is senior software analyst at D.A. Davidson. Gil, we made a Freudian slip that we said it's GPU event, but it's GTC. And I was curious the other day, I thought, what does GTC stand for? And it stands for GPU Tech Conference or something. Point being, this is a super, super wonky thing to have so many people purportedly excited about. Is it overhyped?
Not at all. It's the main AI event of the year. Let's not forget to give NVIDIA credit for a lot of the advancements we have in AI are because they, a long time ago, realized the potential for their graphics chips to provide the ability to do these transformer calculations that make all of this AI possible, first in the labs at Google and then at the labs of OpenAI. And over the last few years, NVIDIA has done a lot to promote the whole ecosystem. That's what this event is about, inviting everybody that's anybody in AI to talk about what they can accomplish together using NVIDIA's products.
Right. So I've read a few notes. I mean, you tell me yours, but Blackwell Ultra, right? That's one of the things. What are the keywords that a non-expert like myself needs to hear to know if the stock is going to rally or, possible problems that could cause it to sell off?
So in terms of the products, there's Blackwell Ultra that's coming out this year, and then Rubin that's probably coming out next year. And what we're going to be listening for from Jensen Huang is multiples. How much faster is Blackwell Ultra than Blackwell? How much faster? How many teraflops per second can Rubin do faster than Blackwell Ultra? That's going to tell us a lot about if NVIDIA can continue to maintain its product leadership over the ASIC chip providers like Broadcom, like Marvell, increasingly like Huawei.
Gil, what about this idea that kind of shocked markets a couple weeks ago when DeepSeek came out, and it was done on a much smaller platform and implied that you need many fewer chips to do high-level AI? Is that idea kind of faded now, or is NVIDIA just powering past that with more powerful chips that people are going to need to buy no matter what? If they're buying chips, they're going to buy these high-end ones.
That idea really shouldn't fade, because what's happening with these AI models is they're getting so much smaller, so much faster, that we're not far away from a day where we'll be able to do inference calculation on our device, on a phone, on a PC, not at a data center. And so this is very important for thinking about how long of a runway NVIDIA has. Is when do models get small enough that we don't do inference at a data center? And since pre-training, or what we used to refer to as training, is something that's starting to hit a wall as well, we're not sure how many data centers we're actually going to need 2, 3, 5 years from now. And that's the concern that overhangs NVIDIA.
So is the implication there that there's some sort of NVIDIA cliff out there that we don't know where it is, but at some point demand is really going to fall off?
That's exactly why the stock has lagged so much over the last 9 months, is that we don't know that. And in fact, we think this may even be peak year. 2025 may end up being the peak year. If we don't have a handoff from NVIDIA's current largest customers like Microsoft and Amazon that have said their chip buying is going to plateau this year, to other customers like CoreWeave or SoftBank, then this may end up being peak year for NVIDIA chips.
So that tone of caution, Gil, is interesting, because there are others who say, this technology is really just starting to go mainstream. And I take your point about using it on the phone someday, but the best models out there are still the ones that seem to be most chip intensive, right? Like Grok 3 is amazing. It's and is that not with 200,000? You tell me what the number is of these GPUs. So if I, as the end user, value having the best experience, the fastest, the most up to date, I like its tone. It's just very useful. So does that tell you, though, that they still need to continue this massive investment in NVIDIA GPUs?
Well, the vast majority of AI searches we're going to do are going to be, what's the best humidifier for this room? How do I entertain my 5-year-old at a restaurant? Those within 2 or 3 years, you'll be able to do on your phone and get terrific performance. Within, again, that time frame, 2, 3, 5 years, the only calculations that we're going to need the biggest frontier models for are the really tough calculations, protein folding, drug development, things like that will, by the way, end up on a quantum computer within 5 or 10 years anyway.
Well, that's the other question, is what does quantum do to this? Because if quantum comes in and accelerates the growth of all this, you can imagine that all of that processing power gets even into smaller and smaller devices. And are you using less chips in a quantum world by an order of magnitude?
That's quite possible. So in that world of 5, 10 years from now, we're probably using our phone for most AI questions, and we're using quantum computers for the really tough questions, at which points data centers just go back to being storage devices as opposed to where we do all of our AI compute.
So then, Gil, last question for you. Have we already hit a top in NVIDIA? Are we past the peak?
I think there's a couple of possible outcomes here. One is that this can continue for a year or two or maybe more, and NVIDIA can continue to grow into next year, in which case there's upside to the stock. If you put 30 times next year's earnings, you get closer to $160. The downside is, if this is the peak year and next year is the rollover year, then if they do $3 of earnings, then we're talking about a $60 price target. So that's the range of outcomes in NVIDIA. It's really critical for us to know whether 2026 will be a growth year as consensus expects.
Yikes.
You have thus paid a middle-of-the-road price rather than one extremely high or low one. And if you use this method on a good quality stock and hang on to it for 5 to 10 years, you may make a sizable profit. It also means you won't have to worry about pricing comparisons and whether the time is right to buy. Instead, you confidently carry out purchases in accordance with your strategy because you have faith in a specific player, in this case, NVIDIA. 2. Taking advantage of sales possibilities. Finding the golden opportunity, the time when you could purchase a high-flying stock at a discount, is another tactic you may use. Determine what valuation you believe is a good starting point and how much you want to spend at that level. This requires a great deal of patience at times. Years may pass while a stock is trading at high levels, leading you to believe that you will never have this chance and that it is too late to join the tail. Until lately, you might have even considered this regarding NVIDIA. Concerns over how President Trump's tariffs will affect business profits and economic growth have caused the market as a whole to fall, with growth stocks like NVIDIA leading the way. Although these factors might have an immediate impact on NVIDIA and other companies, it's crucial to consider equities over the long run. And from this vantage point, the stock still has strong growth potential, given the AI market projection that was previously discussed and NVIDIA's dominance. Let's get back to how to use this tactic. After exercising patience and keeping a close eye on NVIDIA news and stock performance, you spot an opening. It's time to get on the bandwagon and purchase shares of the company because its valuation has fallen, in this example, to 27 times forward earnings forecasts. Your next course of action should be the following. Regardless of whether you wait to get NVIDIA at a discount, employ dollar cost averaging, or both. Prepare to hold for a minimum of 5 years and maintain composure under challenging market or economic conditions. Although it's crucial to review your assets whenever there is news about the economy or the company, strong businesses can typically endure short-term strain and have promising long-term prospects. All of this implies that you can increase your chances of making money in the long run if you have a sound plan in place before you decide to purchase a specific stock. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Its lows of the session, but still ending the day in the red, the worst performer in the SMH semiconductor ETF today. The company holds its AI GTC conference this week with a keynote from CEO Jensen Huang tomorrow. Investors awaiting updates on its Blackwell GPU and its next-gen Rubin chip. Shares still down 22% from record highs hit in January. Over the last week, 3 analysts have lowered their price targets on the stock. So, are expectations priced in? Is this sell the news, Dan?
If it is sell the news, then watch out for the entire generative AI trade. Because, again, we all thought good quarter, good guidance.
Your acronym.
Yeah, the Gen 8. Yeah, exactly. And I played that game right. I mean, listen, it sold off after the results. The stock was already down, right? There was a lot of negative sentiment. A lot of their customers had already sold off over the prior couple weeks. So I just don't know if there's anything new for them to talk about as far as the product roadmap exists right now. So I'd be most worried if the stock, let's say, rallies because it's been down a lot and then fails, because that is just meaning that there's no appetite for this story right now. Or what is the incremental buyer looking for?
So we were talking about this the other day. I'm more interested in what are they seeing right now, not what is a little bit down the road. What are they seeing right now? Has the story changed? We come back to this. Is there going to be a lot more compute needed for inference? And is DeepSeek actually potentially a plus?
Right.
CapEx story. What is, again, CapEx is not written in stone. If companies decide, the environment is not so, we don't view it as favorable, there's too much ambiguity out there, they'll pull back on CapEx. NVIDIA loses to that, I think. That and the fact that they promise in the back half of this year to see a reacceleration of margins. Let's see if they address that as well.
It is amazing that after hearing all of the major hyperscalers come out and raise their CapEx guidance, that there's still disbelief around those numbers, right? That there's still, in investors' minds, an asterisk next to any number given by a Meta, a Google, whoever.
And remember, those numbers and that guidance was well after DeepSeek. It was not. They had a chance to recant or try to hedge their words or something. So I think it's important. I think everyone's saying the same thing, though, that this is an important point for the market. It's a period where the breakdown in semis has been very clear, and it goes all the way back to last summer. NVIDIA's traded the best of all of them, as it should. It's not expensive, but this is an important moment.
So to the asterisk that you just mentioned, they just gave us the guidance. They're not going to change anything, right? So if anything, if they were to come out and be a bit more bullish about that CapEx guidance or upgrade their guidance for the quarter or something, no one would believe it because they had the opportunity on February 26th to do that and nothing's really changed. The other thing I'd say about the asterisk is that, these stocks that got killed in 2022, Meta was down
70% at the lows in October 2022. That stock did not start rallying until they started cutting costs, until they started firing people. They have rationalized their costs as it relates to hiring. The only thing that they'd be able to cut if the stocks were down a lot over the next few months or a year or something would be their CapEx. And that's how these companies do that. I mean, we've talked about this for years and years. You know what I mean? Like when you're spending too much on CapEx, but your revenues slow a little bit, then there's something that has to be reacclimated. And again, like we saw why all these stocks sold off after their earnings, Microsoft, Meta, Amazon, and Google, because their revenue had decelerated and they hadn't laid off that CapEx guidance.
At its annual software developer conference on Tuesday, NVIDIA CEO Jensen Huang is anticipated to provide new information about the company's newest AI processor. Over the last 3 years, the value of NVIDIA's stock has more than doubled as the business has fueled the development of cutting-edge AI systems like ChatGPT, Claude, and numerous others. Although the Santa Clara, California-based company's 10 years of developing software tools to attract AI researchers and developers were largely responsible for its success, the majority of NVIDIA's $130.5 billion in sales last year came from its data center chips, which cost tens of thousands of dollars each. Huang made a suggestion last year that the new flagship product would be called Rubin and would have a family of chips, including networking chips, graphics processing units, and central processing units, all of which are intended to operate in massive data centers that train artificial intelligence systems. According to analysts, the chips will begin production this year and begin to be widely available in large quantities the next year. NVIDIA is attempting to start a new trend of releasing a flagship chip year, but it has encountered both internal and external challenges thus far. Blackwell, the company's current flagship chip, is taking longer than anticipated to reach the market due to production issues brought on by a design defect. The previous approaches of feeding growing data repositories into ever bigger data centers loaded with NVIDIA chips have begun to show diminishing results, and the greater AI sector struggled with delays last year. When Chinese startup DeepSeek claimed it could create a competitive AI chatbot using significantly less processing power, and consequently fewer NVIDIA chips than previous iterations of the model, NVIDIA's stock fell sharply this year. Huang has retorted that since NVIDIA's chips are the fastest at producing tokens, the basic building block of AI algorithms, they will become even more significant as newer AI models take longer to consider their responses. Huang told Reuters last month that when ChatGPT first launched, the token generation rate merely needed to be as quick as reading. However, because the AI is thinking to itself, the token creation rate currently represents how quickly it can read itself. Additionally, the AI can think much more quickly than you and I can read, since it must develop a large number of potential outcomes before it can provide you with the correct response. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.